Now, if I want to take Dow Jones short this afternoon, pretty simple, to be honest, isn't it? Because what we're going to be doing is looking to short it between 46.90 and 46.806. Good afternoon, ladies and gentlemen, and welcome one and all to today's Markets Now session. It is the 22nd of October, and we hopefully are all ready and raring to go. Good afternoon to you, Matthew. Good to see you, mates. Hey, Jack. Good to see you, buddy. We got H&C in the house. Good afternoon, bud. Good to see you all. All right, so where are we at today? It's certainly been a continuation of the last few weeks, and I know I'm starting to sound like a broken record over here on the mic at the moment, but it really is. We are not seeing anything too dissimilar in terms of the market context than we have been seeing over the last, as I said, three to 4 weeks, I'd say now. The continuation of the stagnation continues as risk and fear go hand in hand in our markets at the moment. I've been keeping my tabs on the developments over in the US. We have the progression of the situation between the US and China, trade war, lack of data coming out in the markets at the moment. I mean, if we check out the econ at the moment, we've got nada. Existing home sales tomorrow. Today, we've already had the highlights of the day. UK inflation rate, which came out at 3.8%, same as the prior figure, so stability there with inflation. BOE at the moment is on, it's going to be on call with that one anyway. There's nothing really notable to call out about it. We've got the BOT from Japan, so pretty hefty number, but again, nothing as a surprise. And we've got nothing at all from the US. Tomorrow, we do have the week's first US mainline econ event. It's the existing home sales. 4.1 million is the forecast, which, I mean, generally speaking, if you look at the data, it is a very, very stable economic event. It does not create any kind of market volatility, so there's nothing to get excited about. It is going to be about Friday. Friday, the full round of inflation data that we should have had last Wednesday is coming to the surface. So that's going to be the one that we're all keeping our eyes on and all kind of waiting for. I will be live out in the broader community on Friday as well for the big live CPI trading event. So please do tune in for that one if you are around, because that should be a bit of fun. As far as today goes, though, I mean, there's not a great deal that we're going to be digging into today like we usually would. As it happens, for those of you who are not UTC traders, and those of you who are kind of dipping in and out, on the Wednesday live events and stuff, and any other major sort of news events that we trade, things kind of all took place this morning or overnight. So we've already got FX exposure at market at the moment. Not with this Aussie CAD, of course. This Aussie CAD is ongoing. It's waiting to go. But we are waiting for this one to come back down here. You're more than welcome to take this one on, by the way. This was a trading opportunity from yesterday's trading session that I did with the UTC traders. But for those of you who are joining us just on the Wednesdays, please feel free to take this on. It's still a really nice trading opportunity. Nothing has made it void. As of yet, we are simply waiting for price action to break down into the major port of liquidity at about 90.60 before getting the nice big rally back. We've got the breaker structure here, which is actually still doing very well, and it's becoming ever more established as time goes on. So we're just waiting for the price action to get the strength to bust its way through. Once it comes down to here, we can then set up the pending order and look to trigger that trade, that continuation. I want to have a quick flash up here to gold. So yesterday we took a short on the breaker structure for a 1 to 2.6, which went straight down to TP, which is a beautiful, beautiful trade idea. Really, really nice. It actually came back. If you were an Asian session trader, it came back immediately, straight away back up to the highs, and then at 8:45 this morning broke structure for another run to the downside. So there's literally, you could have threes up on that trading margin this morning there. Really, really nice performance there with gold. We are now looking for trend continuation opportunities from these lows. So we're currently trading at 40.50 as of the time of this session. So if you're catching up on this one on YouTube, maybe in a couple of hours time, or maybe you're inside the trading room catching up on this in a couple of hours time, hopefully we will still be trading in and around this area. And this trading opportunity up here, which is a whopping trade idea, I probably not a 1 to 3.8, to be honest with you. That's a little bit out of my style. So a 1 to 3.2 is more sort of around the margins that I'm looking for. But it's a beautiful trend continuation trade. There is the possibility that we go long from there. And I mean, seriously, guys, that is, we're talking about a very hefty trading opportunity there. So you'd ultimately be looking for stops underneath the previous low. Yeah, entry there. You're looking at around a 1 to 4. Static trading is fixed. So it doesn't require any management once that's ongoing. If we go up to the daily time frame, we can see that a lot of retail money has just been wiped off the face of the planet. A lot of retail longs up here, a lot of retail longs down here, a lot of retail longs down here, and it's just gone straight through the floor, broken everything, and is now appearing, at least, and I say appearing, it's a very key term, not accidental. It is appearing as though we are currently at a fake out event on the daily time frame. So we've got this big wick through, triggers a load of additional shorts down here, and then racks its way back up for that trend continuation, trading opportunity that will look to take, ultimately back to the previous highs, 43.40, 44-ish. Excuse me. So we managed to catch a falling knife successfully down here, and I'm happy with that. It's a good solid trading margin. What we're looking for now, essentially, guys, to take the damn thing right the way back to the top. I mean, this is the most significant price action pullback we've had in gold in size since perhaps there, which was back in May of this year. So, we're talking a fair few months ago. It's you should definitely not turn your nose up at it. It's a very important event, and it is one that we've been waiting for here at in the UTC desk for a while now. So, the M reversal, there was that to contend with. That was what we were discussing yesterday. For those of you inside the UTC trading community directly, we were looking at the possibility of the retest of that midpoint of the M reversal, because then we could get a sell-off which essentially went much further. So that's still potentially on the cards, and that is the risk, of course, with taking a trading opportunity down here. But because of where we've traded, what I would like to think is that by the time we come back up to retest this area, we're going to be at approximately a 1 to 1.8, which is great. That's not bad at all. If we start to come back down and we break structure at 41.44, it means we're going to exit the trade idea there and still manage to come out with a 0.89. So that's not too bad at all as well. We'll have some money in the tank. That's fine. We've paid the cost of the trade, and we've still got a little bit of money in the tank. We had a good go at it, but it hasn't worked out. That's the worst case scenario. The best case scenario is the only other case scenario, which is trend continuation right the way back up to the top to the 4.1. So I think it would probably be quite prudent to take the position down at the lows and have a stab at it for the sake of the extra 1 on the risk reward scale. It makes sense from a risk perspective. Of course, the initial 0.25% risk is going to be at market. So if we take the trading opportunity here, we come up a little bit and it sinks back down again, we're out for 0.25%. As always, that's the risk at market. But if we can break the structure at 41.70, then we're clear no matter what. Because then the exit strategy will be, if we come back down below this level, we are out of the trade immediately. So for all intents and purposes, let's say the market breaks up from here to there. And then at this stage, when the market reaches here, you could just put a blind alert in here. So when your trading view pings you, you just move your stop loss up to, let's say, 41.35 to account for any potential wick throughs, right? Because we don't want to put the stop loss just there because the market might come down for a retest. You might get a wick through and you're out of the trade, but the market continues trading back up to the previous highs, which would be pretty annoying. But I would say, bring your stop loss up to that 41.35 level. So now, no matter what, you are completely clear. You're in a risk-free trade. And if the market carries on going, trend continuation, as we have seen for the last 5 months, then great. We're just going to get an absolutely whopping decent trade idea. So that's going to be the strategy. That's the UTC strategy for gold currently. Now, if we look at the 15-minute time frame, honestly, team, you will be looking to get into this trading opportunity relatively soon. Okay, so I'm happy pinging this one out. We're looking at a breaker structure. That's going to be on this level in here. So I'll highlight that one green for everybody so you can see that a little bit more clearly. There we go, the green bar. And then what you want to do is you want to grab yourself an alarm and you want to place the alarm at 41, let's say 40, what are we looking at? Let's say 41.83. And then you're going to place an alarm in there. So let me download that one. I'll get that one out to you guys now so that you all have access to that one. Upload. There you go. Okay. So that's the golding. That's the gold trading opportunity. So yeah, that's the gold trading opportunity. Right. Where to from here then? We'll have a look at what we've got going on in the FX space so far. So as I said, you're more than welcome to take on the Aussie CAD trading opportunity. Remember that this is an absolutely crucial part of the process. You cannot take the trade before this is hit. So please do be aware of that. As always, every single trading opportunity provided is at 0.25% risk. Please don't go and overexpose yourself. The risk is there for a reason. Okay, so that's the AC long. Now, the rest of what we've got going on at the moment, a little bit of a snail's pace, as I said, because of the state of the market, the context of the market at the moment. It's not great out there. Definitely not great for high volume, high volatility trading opportunities at the moment. So we're in the Aussie dollar currently. It's trading at 64.85. It's going sideways so far. We're not really seeing too much of anything. Euro Oz, very much the same case. We got into it this morning. It triggered the pending. It's not done anything so far. It's just completely sideways. Euro USD, not too bad. We just triggered this one an hour or so before the stream took place. And we've got a break close and a retest of the structural point. Looks quite nice. We've got continuation at the moment. So that one's going relatively well. And then finally, we've got the USD CAD, which unfortunately yesterday we did take a hit on. So we came straight the way up. It reached a pretty decent high, to be honest. It got to 140.43 and then boom, sank straight away. So that was a loss on that USD CAD. There is the potential for a secondary opportunity on this one, a second chance, as we like to say. But I've got to be honest, guys, I'm not feeling it. I'm really not feeling it at the moment. So probably going to give that one a pass personally. We've already covered the metal markets, so we'll go on to energies. Looking at natural gas today, absolutely phenomenal still. It's having a 1.73% growth day so far. Yesterday was another really big, significant day for it after a 15.83% day the day before. It's on fire at the moment. It really is. It's the perfect storm, pun intended. So looking at this one now, I mean, we're still waiting for a decent retest. We came so close to looking for that to the beginning of the price action pullback yesterday, and it just decided to go for a second leg for another like 6 or 7% from that low. Where are we looking at? So midnight was about there. So yeah, that's another 5.3% move higher. It did have a nice retest down here. It came back down. Nice big sweeping move. We saw a lot of commercial money sort of inflow, outflow in this area, and now it is just continuing upwards. We're on sort of, I don't know what to say, the knife's edge. Let's say we're on the knife's edge with this one because of how fast it's rallying. So this one could really start to spiral as a lot more commercial interest takes a bid in it, and it starts to just grow exponentially, right? We start to see the volume really increase, and it goes and goes and goes. So we're going to have to make a stand at some point. I want to see a decent corrective. Okay, corrections have to happen in the markets. Markets do not travel in a straight line. We all know it. So it's just about finding that level that it's going to be the one for the correction. So if we look at this area here, we've got a nice break above it. We've got the continuation above it. If we go back down to the 15-minute time frame, we can actually see that this retest, this sweeping retest, was pretty much that retest of the daily point of liquidity that we were looking for, which is a shame because it actually came with a beautiful breaker structure point in there as well for that long. So you could have, we could have ultimately this afternoon taken that at around 12 noon, but it just didn't seem quite right. It just didn't sit right with me at the moment. So I've got my eyes peeled on it. That's all I can say. A lot of these moves happen, this big overarching move up here, coming up to the high there at 350. That took place at, all overnight and then, until 6:30 a.m. So it's kind of outside of our trading hours. But I would really like to see natural gas trading back down into 335, maybe coming up to this sort of area here. And then once we get back down there, we come back up again, then I'm going to be interested in taking a long. If that long fails and the market continues trading down, that's only a good thing, by the way. So in an ideal world, I would like the first trade to hit stop loss because it means that I'm just going to buy in at a much better value down at these lows somewhere, maybe 315, maybe 310. That's really what I'm looking for. I just, in the back of my mind, I'm a little bit fearful. Time is getting on. Times are getting colder now. We're definitely getting into the colder season. And I think this is really going to pump up this year, cyclically speaking. So have to see where we go, guys. We'll have to see where we go. Looking at UK Brent, had a little bit of follow through here. Nothing that's too much of a notable call out. But it is seeing a little bit of additional demand start to take place. We've got the nice big point of liquidity down here. I want to see a move further in. I do not believe for a moment that all of the commercial players in the world were having their orders triggered at 60.21. I just can't see it. So even though we're having a pretty decent move today and things are looking good, I am still anticipating trend continuation down into the 59 area, 59.50, maybe 58.90, somewhere about there. We can get down to those levels, start triggering some major money orders down there, then we can look to get that long play and bid the UK Brent price back up to, 66 or so. So that's another one that we're tentatively watching at the moment, but I won't be releasing any dedicated trading opportunities in at this time because it's just not ready. And then that takes us on to our US indices team. Are there any questions? Let's check, see if there's any questions. Nope. All good. All right. So US 30 Dow Jones, starting from the top. Yesterday was not too bad for the Dow Jones. We did get a decent bid initially off the breakout. 2:30 up to 4 p.m. was quite the move, actually. Excuse me. Looking at it now, it's come back down. It's taken a bit of a rest, isn't it? It's just in that zone out a bit. So we've got the high up there, which is looking pretty good. We've got liquidity down here, which is also looking quite tasty. With this now has built our trading margins for the afternoon. Not looking too bad at all. We've got the median of the margin, which sits about there. I'm only putting it there and not directly in the middle because at the end of the day, that's where the market's sitting on top of. So we cannot discount the importance of this area because the market has been using it as a floor for the entirety of today and actually overnight in the Asia session as well. Now, if I want to take Dow Jones short this afternoon, pretty simple, to be honest, isn't it? Because what we're going to be doing is looking to short it between 46.90 and 46.806, which is looking pretty good. If you want to go long the Dow Jones today, then you're going to look at taking it out on the other side of this area, which is going to be about there, for, I would say, pretty much the exact same trading margin on the upside as well. If you go down to a 1 minute time frame, you will see that the margins available on the lows and the highs are absolutely fine. There's no risk here of not, running out of room to breathe or anything. So it's just a simple breaker structure, looking for the move, entry at around 47.043, targeting up at 47.123, with the stop loss situated at about the 50% point of the median, of the upper median zone here. So it's going to yield around about a 1 to 3.36. It's never going to be exact, but that's approximately what we're looking for here. On the downside, we're looking for very much the same thing. Entry just below on the breaker structure, targeting 46.807. Stop loss at about the 50% point of that big zone there, that wide zone. What this does is it essentially puts this area of liquidity inside the stop loss, which is what I'm really looking for. Possibly bring that just up a little bit more there, maybe make that a 1 to 2.9, and that's going to be your short trading opportunity. What this does as well is it creates the NML in the middle here for price to have a really nice time, room to breathe, flex, and do what it needs to do before we find that real solid commercial move. So not too bad going there on the Dow Jones at all. Download that one. Next up, we've got the NAS 100. Yesterday's analysis is still absolutely valuable on the NAS 100 today. If we look at the anchor chart up here, you can see that the margins haven't, they won't really have changed at all. The only thing we're going to be doing today is being a little bit more pessimistic with our entries. So yesterday took a hit on the breakout on the NAS 100. We actually took a win on the S&P 500 there. The NAS 100's loss was due to the fact that we were taking too much of an aggressive entry. Now, in hindsight, and now that we have the previous price action, of course, to work with, I would be favoring looking at a level like this for entry and splitting these two margins down directly in half. So if we go to the 1 minute time frame now, we can just look, say to ourselves, break a structure here, short, target, and stop loss. A nice margin above for around a 1 to 3. Really nice little trading opportunity there. You can, in all fairness, take the short above that level, but I just want to say that I'm not going to. My reasons for not going to above is because of these areas in here. It doesn't mean that the market's not going to be able to get through them, because it probably will. And like I say, you do have the availability to trade in this margin, because it's pretty decent. It's not too bad. We've had a decent V point in there as well, which is quite nice. The market's passed down yesterday's trading. US Open was a successful run back down to this low, but it hasn't come without its issues. So just appreciate that if you are trading in the upper half of this trading margin, there's probably inherently more technical risk between 25.11 and 25.077 over and above what there is down below between 25.070 and 25.030. Now, moving on up, we are going to be looking at a breaker structure. Really nicely placed, this one as well. It's super clear right there. And we'll be looking for the long trading opportunity above there with a target profit at the highs and your stop loss there for a 1 to 2.77. Again, really nice, well-rounded trade idea. I would actually argue that the long on the NAS 100 is nicer than the short. Now, I just want to outline the downsides to the NAS 100 layout today. The no man's land is absolutely monumental. This area in here is ultimately where I will not be wanting to trade. Okay, so it's got a lot of room to breathe. It could be the case, and especially where the markets are at the moment, with how much risk is in the markets, how much fear and uncertainty is surrounding the markets, that we just end up staying in there, so no trading opportunities become available. It's part of the process. It's part of being a trader. Sometimes you just have to sit on your hands, all right? So just be aware of that one. Don't try and force the trade. The trading opportunities are there for you. So please, sorry guys, just got a missed call. Yeah, so where was I? Trading opportunities on both sides of the market. They are there for you for a reason. Follow the plan, trade the plan, don't stray from the plan. So let's download that one. Next up, we got the S&P 500. Now, I don't actually think the S&P's probably, it's probably a bit overkill to have all three. What the hell's going on here? There we go. Yeah, it's probably a bit overkill to have all three, but you know what? I think we're going to do it anyway. Just give you some options. I actually did make a nice trade yesterday on the long on the S&P. That was from yesterday's trading setup in the US Open live stream that we did, which is pretty nice. And the margins are identical today as they were yesterday as well. So we are looking for the short, which looks like this. We are looking for the long, which looks just like this. Short, long. Your parameters around this are rejections from the high or the low. And you are ultimately looking to continue trading the range. Entry is below the breaker structure for the short and above the breaker structure for the long. Okay, but this part of the process is absolutely necessary. The market must reach these major liquidity points first before you take your trade, because we follow the money flow of the commercial institutions. And if we end up taking trades randomly, we are not doing that. And that ultimately leads to losses and blown accounts. So we're going to download that one as well. Right, so US markets are completely set up and ready to go for everyone. You should all have a really good, clear understanding of how and why we are doing what we're doing today, and why, most of all, patience is going to see you through. Patience is the number one commodity right now in our markets. Not being preemptive, but being reactive to what's going on around us. We must remain so. So please do be patient. Don't let yourself get carried away. Don't get overexcited about, variables of situations that could take place in the markets at the moment. Things are high risk. There's a lot of uncertainty, as I've already stated. You need to pay it the necessary respect. So with all that being said, are there any questions or anything that I can do for you guys? Or are you all feeling confident about this afternoon, which is what I hope? All clear? Excellent. All clear, Matthew. Great stuff. Thanks, buddy. Yep. I'll take it as an all clear from the rest of you. But listen, guys, if you have questions after the session or anything like that, please feel free to drop me a line in the general chat. I am here all day. I am available. And ultimately, that's that's the community that we want. That's the community that we want to build here. So please do ask questions. Any curiosities or anything at all that you want to know more about, please fire the questions out. So I'm going to wish you all a wonderful day. Take care of yourselves out there. For those of you on YouTube as well, please have a fantastic rest of the trading week. If you haven't done so already, please also feel free to join in the trading community. UTC Basic is free, which means these Wednesday public events will be available to you every Wednesday. And if you want more, then you can proceed and have more. But take care, guys. Have a good one, and I'll see you then. Cheers. Bye-bye.